do not bet against a December rally in the S&P 500. That's according to our next guest, who sees a chase in stocks ahead of the so-called Santa Claus Rally. The market gains that historically come from the final 5 trading days of December and the first 2 days of January. This year, that's going to be December 24th through Jan 3rd. That is the so-called Santa Claus Rally. For more on that and what to expect ahead, we've got Ryan Detrick, the Chief Market Strategist at the Carson Group. Ryan, great to speak with you. Just want to get some context on this December. We've obviously had one of the best years on record for the broader stock market here. Does that mean that this December is also going to be a record-breaking month?
Yeah, thanks for having me, and happy Monday, everybody. Listen, we know it's been a strong year, right? Come on, all year, we get that. What's really interesting about December, the first half of December historically isn't all that great. It's the second half of December, starting like right now. By the way, today is like Eat Anything Covered in Chocolate Day. So I don't know if that's a coincidence or not when the rally starts, but that sounds like a pretty fun day to me. And you think about it, yes, we're flat-ish on the month, up a tad. Just some things to think about. 9 of the last 10 election years in December, stock market was higher, stock market being the S&P 500. When you're up 20% for the year going into the last month, 9 of the last 10 times, stock market was higher in December. There's more of these, but I think the reality again is we shouldn't be overly surprised that last week was weak. Yes, it's 10 days in a row now, more decliners and advances in the S&P 500, the most in over 20 years. 10 days in a row, value stocks have declined. I mean, that's kind of weak-ish, but we would not stop believing in Santa just yet. We still expect the second half of this year to be, or the second half of this month to be fairly solid.
Why, Ryan?
Yeah, there's a couple things. I think it all starts with the F word as we talk about the Fed, right? The Fed's going to come up. People are talking about the Fed here on Wednesday. They're going to cut, as you just talked about. They're going to cut, yes. Is there going to be a hawkish cut? Is it going to be a dovish cut? I mean, we continue to think that we look at the inflation data. I know everyone's talking about that CPI data being sticky. If you look under, peel back the onion, if you will. There's 2 components that why we have excess inflation now that we did in 2019. It is because of shelter and it's because of auto insurance, both lagging things. Look at everything else out there. CPI is actually lower, okay? So again, there's all these ways you can look at it. We don't think inflation's a problem. We think the Fed hopefully realizes that, and there will be more cuts into next year. And again, and the other reason it is what it is, you do tend to see a chase. I do this for a living, get to talk to a lot of people who manage a lot of money. A lot of people have missed this rally, talked about being overweight bonds. Bonds are up 2% this year. S&P's up 27%. The honest truth, a lot of people manage a lot of money have missed this, and there's still a reason to think they're probably going to want to chase into the end of the year. And that's what you tend to see. Low volume, holidays, everything's out of the way, Fed's out of the way, probably just an upward bias.
But before we move past the Fed and say that it's out of the way, we do have some new data this morning, those PMI data and the services looking particularly sticky, the highest level in the survey since October of 2021. Are you seeing anything in the charts that you look at that throws a little bit of cold water on the bullish path forward for the market that's driven by a sure thing bet on the Fed continuing to cut?
Yeah, not on the Fed cutting, I'd say not quite as much. I mean, that's true there, but look at expectations. I mean, one thing Jerome Powell said for years, he wanted to see forward expectations, consumer expectations come back. I mean, those have come back significantly, whichever survey you want to look at. But one thing that we've written about, talked about, U.S. dollar strength. I mean, when the dollar's been strong here, right, we expect the dollar to begin to go lower. But if it doesn't, that can be kind of the thing that upset the apple cart, so they say, because the stronger dollar historically isn't usually a sign of risk off, or it's a sign of risk off, what I should say. Not so much people being optimistic and bullish. So that's one thing we're watching. We're not there yet, but that dollar strength does have us that could upset this bullish thesis that we've had for going on 2 years now.
Right, I think for investors out there trying to figure out just what exactly that bullish thesis looks like between now and year end, obviously only about a couple of weeks from now, but I'm curious, as we do have the Dow coming off of 7 down days in a row, it does look like we might be regaining some momentum here today. Are we getting back to all-time highs, do you think, before the end of the year?
Yeah, we think so. Yes, the Dow's down 7 days in a row. Yes, just on Wednesday last week, the NASDAQ hit 20,000 for the first time ever this year, okay? And I know this is 1,000-point intervals, but the Dow hit 45,000 not that long ago. 8 separate 1,000-point intervals this year, the most ever. I think it's just important to remember how far we've come. A little pullback here, but even in the 7-day sell-off on the Dow, it's not like stocks are down a lot. Stocks are only, the Dow at least, is 2.5% from an all-time high. after a 7-day losing streak. I went back in history, only like 2 other times in history have we seen a 7-day losing streak with the stock market that close to an all-time high. On average, you're down like 25% off the highs on a 7-day losing streak. What's that mean? This is a kind of slow cuts, if you will. There's some positive things out there still. I think it's more just the market kind of catching its breath, honestly, for the end of year Santa Claus rally. One more thing on Santa Claus. People talk about December all the time. Like you started the conversation. It is the last 5 trading days of the year and the first 2. Those 7 days are historically known as the Santa Claus rally. Those 7 days are up almost 80% of the time. No 7-day combos more likely to be higher, up about 1.3% on average, the third best out of all the 7-day combos out there. So again, we're getting closer to that period. And one final thing on this, guys. Last year, Santa Claus didn't come to town. Stocks were down during the Santa Claus rally last year. Now, they were up like 8 years in a row before that, something like that. But again, just if we are by some chance lower, that's not the end of the world. But we would still expect to see Santa come to town this year.
All right, Ryan, we all hope you're right. We're all rooting for that. We'll see how exactly this all plays out. Ryan Detrick, thanks so much.
Thank you.